Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is August 12th, 2024, and we're looking at Bitcoin here. We have now entered the new week, and you'll have to forgive me. My voice is a little worn out already on a Monday, which is kind of crazy. Did a couple of Spaces events today, and then had some conference calls and a whole bunch of other stuff going on, so I apologize ahead of time if my voice starts to go on me. But we're going to take a look at Bitcoin on the daily. We're going to follow up with where the weekly closed. And I'm going to talk a little bit about kind of where we are in terms of trend, support and resistance, of course, volatility and the momentum. And, try to illustrate what it is that I'm looking for next in this current move down, because Bitcoin did put in a lower high. So we now have a confirmed lower high on the daily here. This occurred upon the closure on Sunday, and that was the closure below the 59,550 level. When Bitcoin closed the daily candle under there, that confirmed not just the swing high being in, but it confirmed the actual closing high here being valid, and that is at 61,700. So this is essentially the high that needs to be taken out to the upside on a closing basis to set from here, if it were to happen right from here, as a particular scenario, that would set a higher low plus a trend break. That's one of the more preferred scenarios for the bulls here. And we're going to kind of jump right into this. So in terms of trend, there's some charts that I shared in some of the various Discord servers that some of you have access to. In the various communities, that being New Bitcoin Order, Nat Monkeys, Pepe Ordinal Maxi, Extra Ordinals, or Ordinal Sigma X, where I do often share my charts. And of course, you can chat with me in those servers as well and ask me questions or get some feedback or give me some feedback as well. We were talking about some different scenarios, and I showed this particular chart type of a scenario. And that is kind of the two preferred scenarios here. Oh, that arrow is red. Let's go ahead and make that white. The two preferred scenarios in green. So we have the lower high and then the downtrend. You want to see higher lows. These would be in the green on both a swing. Obviously, a swing higher low is going to come in anywhere above $49,050 right now. But in this case, a closing higher low structure with a swing higher low structure preferred, coming in, somewhere around where the lower first has now moved to. And then this is just an example, or, equal low, so higher low or equal low on a close. In this case, that's on closes above $54,000. So that's where we're looking for the potential for Bitcoin to put in a closing higher low and a swing higher low. That then we would want to see price break above the previous high that was put in on Thursday of last week at 62,755. Closes above there, of course, would break the downtrend. And if you have a higher low in place, well, then you have a trend reversal. So that's what I'm going to be looking for in terms of structure that would be far more encouraging than the other scenarios on this chart. And that would be a closing lower low with a swing higher low, or a closing lower low with a swing equal low, or even a closing equal low, though that's highly unlikely. Or in many cases, if you see this low getting run here at $49,050, that's where we could potentially see like a wick lower with a close back inside the wick, which would be a lower low swing, lower low close, but indicating that we're likely looking for further downtrend, but the downtrending conditions for continuation on a closing basis have not been met. That would be the next two scenarios. So we'll just call it a swing and swing higher low, closing lower low. If that were to come up and break this 62,755, we would still need to then see a closing higher low from there. So even though in a scenario where we got like a swing higher low, but a closing lower low, well, we would have the swing higher low in place, but we would need to see a subsequent higher low close from there to confirm a trend reversal. And the same goes for the equal low structure. And obviously, if we were to see something like this, where it was a close right on, the low here and any kind of wicks lower, we're probably looking at trend continuation shortly thereafter, but not guaranteed. And then, so you've got the two green scenarios, got the two yellow scenarios, and then we have just trend continuation to the downside. So continuation of this particular downtrend on both a swing and a close. So any close below $49,050 with, obviously would have a swing lower low or a wick lower low, if you like. That would just be trend continuation to some of the areas that we've discussed prior. So that's the way that I'm evaluating what to look for next on this particular trend. So what are the chances of that happening? We can investigate a little bit deeper in the daily here, and that's really where we can get into some of the other things that I've spoken about, and that's support and resistance. So we have trend, we have support and resistance, and when looking at support and resistance, we have a few different things to be aware of. We have the longer term time frames, and then we have the shorter term daily based time frames with a few higher term time frames thrown in there for good measure to the downside for supports because of where Bitcoin is, been consolidating in terms of it being at a higher level than some of these areas. So let's go ahead and take a look at the monthly and weekly support and resistance chart that has both the closes and the swings from primarily 2021. And the reason why I'm still using 2021, and I've gotten this question quite often actually recently, is why don't I use some of the closes that came in this cycle, in this current area? And that's because Bitcoin has not broken out of the prior cycles closing structure to actually go and in the longer term time frames make new highs. Now we did get a slightly higher high on the monthly close, but it still remained within the wick high area. So if you were to look at the monthly, for instance, you can see that we did get in terms of the monthly as it relates to the 2-month and the quarterly, you can see the monthly did make a higher high close and swing structure, but on the 2-month, it did not. It made a higher high closing structure and a higher high swing structure, but that was all in the context of remaining within the swing structure of the prior cycle. And the same goes for actually not the quarterly. So I'm mistaken on that. The quarterly actually did make its higher high swing and close. So, could we use that and could we add this to our chart? Absolutely. So let's go ahead and do that there now. So valid point for those that brought that up. We can just keep the swing all-time high as the swing all-time high. And because this is a closing quarterly high, we can go ahead and label it as such from this year. So I believe this is 2, if I'm not mistaken. We'll go ahead and we'll keep it consistent with the closing structures, which are in orange. And then we'll go ahead and we'll label this. So go over to text. And we'll make sure it's to the right. We'll put this on top. And this will be the quarter. Which quarter was this? This was Q1. So Q1 closing high on the quarterly here. So we'll do Q1. That text is a little large. So Q1 closing, close high, we'll call it. And in this case, sorry, the keyboard's a little far away. In this case, this is valid to put on the long-term chart. I just haven't really been paying that close of attention to it. But we should have that on the longer term. So glad I corrected that. So there is that 71,300 area for the longer term timeframes, as there is crossover in some of these areas on the monthly. So we've got the actual March of 2021 monthly closing high from the prior cycle. That was also the quarterly closing high of the prior cycle, and that's at $59,000, $58,800 here on Coinbase spot price. And you can see that Bitcoin is hovering right around this area. It did deviate it in Monday's candle and closed above it. So it came down below in Sunday's close below, kind of deviated down, hit that lower first standard deviation. We're going to talk about volatility in just a second as it relates to support and resistance. In this case, it did close above. It's coming back down for a little bit of a retest. From the longer term timeframes, if we get longer term timeframe closures below the quarterly, then it's going to look more and more like it wants to run the current low side structure anywhere down to this 55,850, which you're going to see is part of the local accumulation distribution levels that I'm going to have marked off on the next support and resistance chart that I show. But realistically, from the longer term support and resistance levels, if we get any longer term time frame closures below here, it's going to start looking like it wants to come back down to these weeklies from 2021 that were just ran in last week's Monday candle. So that's that $53,000 September of 2021 weekly swing high. And then the August and December of 2021. I think the dates might be incorrect there, so you'll have to forgive me. I'm not sure if that December or August one is correct. I think they might be, but I'll have to double check. I'll do that off video here. But that's closing highs on the weekly that are coming in at around 51,800 and 50,800 respectively. And then, of course, that was an area that was more recently retested here back in February, in mid-February at $53,000, and then held support around those weeklies. Give or take, it's about $50,000. Call it $50,000 to $53,000. There is some precedence for that. Anywhere below there from the longer-term time frame perspective, we start seeing like a monthly close down there. Then we're definitely looking down to the next levels. Obviously, the current swing low structure, they're at $49,000. And then the monthly from March of 2022, this was a monthly swing high coming in at that 48,240. And then the August and March closure, so August of 2021 and March of 2022 closing highs that were coming in at $47,000. And actually, I don't remember if that one was a closing high. I think that was a close open that I marked because it was relevant. And it did act as resistance on a close on the daily as well. But that's $47,000 to $45,500, but roughly, anywhere below $45,000 is probably the name of the game for that zone on the longer term timeframes. Now, we don't really have to worry about the longer term timeframes too much outside of weeklies right now coming into the monthly close. And when we turn this chart off and take a look at, let's go ahead and put our quarterly close up there in that chart. And then we'll go ahead and get rid of volatility for a moment here, the Bollinger Bands, which is kind of a mixture of trend and volatility. But in this case, you can see I have labeled these areas locally in terms of conditional analysis, support and resistance levels. So essentially, if Bitcoin begins to close back below 58,400, it can swing down there. That's fine. But if it closes below there on the daily, then the support and resistance level is essentially this risk zone. So 58,400 to this 55,800, which is this close open over here. And that is the top side of this danger zone between 55,800 and the swing low, which was the prior lower low in this big range up here at 53.5. If we start seeing closures below 53.5 on the daily, of course, that would be below the current closing low, which is coming in at $54,000, as noted on my trend chart that I was showing earlier with some examples of what to look for. Any closes below there is a chance for Bitcoin to save itself within this danger zone around 53.5 on a close. But if it starts closing below there, we're looking to target one of distribution. You're probably thinking like, well, why is there even that small gap in between there? It's because if we lose this low, I'm looking for $53,000 to get hit in the lower term timeframes. If it starts getting closed below on the daily, I'm looking for this target one of distribution to start getting filled out on the daily, possibly even a run between this 53 and 50 and even down to the current low wick at that $49,000 area. Any closures now below $49,000, and of course closes on the daily around that area below the $50,000 level, going to be pointing right towards that wick low anyway, down into distribution target zone 2, which is between that 48,240 to 45.5, which is the monthly lower high close that kicked off the bear market back in 2021 and into 2022. So that is, or 2021. That's those are the weeklies, I should say, and that just happens to be, this is the weeklies rather, and this is the monthlies. So target 1 is the weeklies, 53 to 50 basically, and then 48 to essentially 45 for target 2. Now to get very specific, it's 48,240 to 45,528. And you'll notice that electrical cost, and this is the just purely looking at the electrical cost to produce Bitcoin. Essentially, you could think about it like the cost to produce Bitcoin at its very base layer for miners. And this is currently crept up to around 45,400. And in fact, we should take a look at the updated chart. So I'm going to warn you, this chart that I'm going to flip to in this next screen is going to be white. So if you're in a dark room, prepare your eyes. Here we go. And this is the Bitcoin production cost chart. And actually, we can see that it's come up about $50 more to 45,451. So essentially, we can update that electrical floor cost, which is continuing to rise, which is what we want to see as kind of the base cost for Bitcoin and the lowest floor cost, essentially, to produce Bitcoin. It's very, very rare that you see Bitcoin trading below this and closing below it. It can trade below it and does so typically just post-halving, like what we saw up here. If I get the cursor a little bit closer up here, if I can highlight that, the black closed the miner price and the actual cost of Bitcoin on the exchanges, or the trading price, did close below the electrical cost for just a very brief period of time, just post-halving. This is very typical. Every halving, you can see this back here. It did the same thing in 2020. We saw the same thing in back in 2016 into 2017 as well. And, you know, it's very rare that we see closes below it. Now, this chart doesn't show it, but there are a few other charts for electrical cost that do show that we did get like a couple of closures below it at the bear market bottoms. But typically, you know, even in the worst case scenarios, like back here in 2020, miner price and actual exchange price, essentially during that crash, just spiked electrical costs. So, you know, I am looking at that as worst case scenario, and if it gets under it, well, man, that's a generational opportunity, in my personal opinion. Of course, not financial advice, and I don't think it would trade below there for very long, at least as long as it's rising or staying flat. And of course, there's always the chance that electrical cost starts to drop further. We have seen this in extreme volatility based environments, like back here in 2016 into 2017 after the halving. You see Bitcoin traded below the actual electrical cost and then basically rode it all the way up. And then we had two very volatile moves. And during that first volatile move, or just after that first volatile move, in December and 2016 into January of 2017, you know, it was a nice spike up and then a big washout back down. And you saw that that electrical cost took two big legs down. But Bitcoin, you know, traded above that. And of course, if electrical cost comes down, so does total production cost for Bitcoin, which currently you can see over there on the right-hand side is sitting at $64,000. But back then, you know, Bitcoin basically traded above it, and then for a brief period of time traded back in towards it, and then we saw both electrical cost and production cost rise again. And essentially, that comes down to competition on the network combined with the actual competition for blocks on the network. So not just miner competition, but competition for, you know, block space for each individual block. And in terms of fee competition. So once that starts to rise again, then electrical cost and total production cost begins its uptrend again. And I, there is the chance that we could see electrical costs drop, and of course, therefore, production costs drop again. But as it stands right now, it's continuing to head up while prices headed down towards it. This happened in 2020, right after we had the actual halving price. The halving date rather came in after the big crash where Bitcoin spiked electrical cost, so it traded right on it essentially, and then just under it post halving, and then it jumped up above total production cost, and then jumped back in under it. And we saw this, just after the halving, Bitcoin traded inside of its total production cost and slightly under electrical cost, and then jumped up above it, and now has come back down into production cost, jumped up above it, come back down into it again. So this isn't really that abnormal. What is, concerning for many of the bulls right now is the downtrend on the weekly. And it's very clear on this chart. It's a downtrend, not just for price, but for miner cost as well. And it's still a downtrend for the total production cost and electrical cost. You want to start seeing that all turn into an uptrend, and that's all driven on the back of price. So that is essentially the floor for what I'm looking for, is coming into a level of confluence that we have for the bottom side of our target too right now. I would just generally call it $48,000 to $45,000 when looking down. And we can update this to be 45,451 is the current electrical cost. And what did I do? Oh, I goofed something up. I totally goofed that up. 45,451. There we go. So it's essentially right at that monthly closing lower high from the bear market in 2022. So that is a key area. Only if we see the conditions met. Could it just spike down there and then still close inside of some of these other areas? Absolutely, just like it spiked through target one of distribution. Which this does not meet the criteria of being distribution at that point, right? It has to close in this area and start filling it out. Therefore, you get your distribution into reaccumulation. Same thing for closes below $49,000. Then I'd be looking for target two of distribution. Price starts trading in here and then filling that area out, going into reaccumulation before heading back up. Right now, Bitcoin is still within its, the bottom side of this overall structure within this range. And, it's one of those things of where we're looking for trend. And in the confluent areas that I spoke about earlier. So to kind of throw trend back on here as an example, you can see that essentially I'm looking for somewhere around this support area between 58,400 and this close open structure here at 55,850 to be essentially a higher low structure. And if it does start to dip down into the danger zone, then we keep a very close eye on $54,000 rather, for a closing higher low structure that can break the downtrend wick high here at 62,755. So there you've got your trend and then your support and resistance confluences. What would I be looking for above there? Well, the arrows kind of give it away. This is just an example. I didn't actually have any support and resistance areas on the chart when I drew that example. But if Bitcoin does begin to break out or break back into the recover zone here at 60,000 to 60,300, then I would be looking for it to move back and try for a downtrend break somewhere around that 61.8 at the close open up here to that 62,755, 62.8 area. By the way, that is a close open right here around 62.8 from the prior downtrend over here. Above there, then I'm looking to the top side of the recover zone around 63.8, which happens to be the wick. So we have the close at 62.8 and the wick at 63.8. Above there, I would be looking for price to head up to the pivot zone somewhere around 65 to 65.5 here. Above there, we need to see closes above 67,272. That is this lower high over here, to then go and run 68 to roughly $70,000, which is where this last high came in that resulted in the downtrend. So essentially above $60,000, I would be looking to the local structure around 61.8 to 62.8. Above there, I'd be looking for tests about $1,000 higher to 63.8. We start seeing daily closures above there. I'm looking to the pivot zone somewhere around 65 to 65.5 up here. And then if it can make its way in there, keep a close eye on 67.272, that lower high over here. If we start seeing closures above there on even medium-term timeframes, I'd be looking for a quick move to $68,000 to $70,000 at the run the high zone. Anywhere above there, on closes on the daily especially, I'd be looking for the highs at 71.5 to that 73.835. Above there, it's a zone of about 73 to 75, and then 75, 78, 78 to 80, and then mid to low 80s from there. So we've kind of covered both the upside and the downside here in terms of the support and resistance. Let's go ahead and throw on some volatility metrics, and we're going to use bands for this. This is a triple Bollinger Band set. This is mine. You can get this for free in the link in my X profile, the bit.ly link. It is a private indicator, but it is available for free to anyone who just follows the link. You just add it to your indicator favorites, and then you can use it. It's got a whole bunch of other built-in features. I only really show off the Bollinger Band set. And then, of course, the code that was so kindly allowed to be used by Caretaker. So Caretaker is the creator of the Bollinger Band width percentile, which is a volatility metric for the Bollinger Bands. He allowed me to reutilize his code in this particular indicator. So we will look at BBWP, which is the volatility metric, but we want to see where there are confluent volatility levels on the bands here. So essentially, when you're looking at volatility, and we already know what trend we're in a downtrend, and then you look to support and resistance, and then we need to see where the confluences are with volatility because it gives us a range. Living anywhere below the basis band, but trading above the lower first gives us a volatility range between the basis band and lower first, rather. Anywhere below the lower first, then we have a volatility range between the lower first and the lower second. But as it relates to support and resistance, because those are still valid levels to pay attention to. Anywhere below the lower third or lower second, then we're looking to the lower second and lower third as a zone for volatility. Of course, anywhere above the basis, then we're looking to the basis and upper first. Anywhere above the upper first to upper second, upper third. So essentially, we want to see Bitcoin holding this support at 58,400 and closing above the lower first. And I want to be very specific. I'm talking about closes above the lower first here to kind of preserve its opportunity for a nice, strong higher low in and around this risk zone support. So that would start to look good to then go up and try to regain this overhead resistance here at that 60,000 to 60,300. And then test up towards the basis band, which is coming in roughly right around this high at 61,800 or so. So that would be the next big criteria. If it can get above the basis band, it still needs to get above this wick high, which was a resistance area at 62,800 to go test the overhead resistance at 63,800. Above there, then we can start looking to that pivot zone, and just right in the middle of that pivot zone between 65.5 to 67,272. We have the upper first, which is coming in at $66,000, kind of splitting the difference in that zone. And then above there, we have the run the high zone. And right at the top of that zone, we have the upper second standard deviation, just above $70,000, coming in at 70,550 or so. So we have that 68 to 70 zone would have to be recovered. And then we need to see closes above the upper second to get expansion to the upside into the run the highs, or the bull run begins above here zone. Now, to the downside, because this is still living below the basis band is a 20 simple moving average, and then we have the standard deviations 1, 2, and 3 to the downside away from it, and 1, 2, and 3 to the upside away from it. In this case, what we need to see is a compression of the bands. Now, what would do that? Price moving back towards the basis would help to compress the bands, and then getting some consolidation in here would help do that. Now, the bands are fairly spread out right now, which gives Bitcoin a wide area of volatility to operate in. And, from the upper second at, the more extreme level, not the total extremes, that would be the upper third, but at the more extreme level to the upside, 70,500 or so. To the more extreme levels to the downside, would be right at the bottom side of the danger zone, roughly around 53,500. So we've got primary areas of resistance. 53,500 is, the prior low of the range. And then we've got, just above the $70,000 wick high, we've got, 70,500 as a volatility resistance level. So we have the bands in position in very key levels. If we were to start seeing price closing below the lower second, we'd look for continued expansion to the downside into target 1, which is being bracketed by the lower second and lower third. And extremes to the upside, we'd be looking into the, above here, the highs basically, and then above the highs, run the highs or go on the actual bull run. Roughly around where we've seen all these tops come in here, just above $70,000 to that 73,835 at the extremes. So what I do want to see is some compression, and I want to see this basis band regained. That's either by price going sideways and holding support and the basis band coming down to it and then price trading above it, or price trading above it from here. That would start to look good. We would start to see a compression again. We would likely start to see a trend change and then form to the upside. Otherwise, if it remains below the basis band, we're likely going to see continued downtrend, and then the possibility becomes that much more viable for an expansive move or a trending move to continue to the downside and retest those lows, possibly lower, of the current move down. So that's the way that I'm looking at it from a volatility perspective. What I will tell you is we see that the BBWP is red. That just means that it's BBWP is under the moving average. We're going to look at RSI in just a second, but let's go ahead and put BBWP on the chart here. This is telling me that mean reversion has already begun. Essentially, when it's down here, it's compression to expansion up here. And then when it's coming back down, we have mean reversion. Well, we've already seen the mean reversion play out. So the expansion move to the mean, to revert to the mean, which is the basis band in this case, this is well underway, but volatility is still high. As you can see, it's pretty high up on the chart here at a 79, almost 80%. So that is what is creating this very large range between the bands. What I want to see is this cool down, bands compress, and then regain the basis and start working its way up those volatility bands, and of course regaining the overhead resistances and creating some of the structure that I talked about earlier in terms of a trend break, high or low structure, preferred above $54,000. So that's what I'm going to be watching for and paying very close attention to during this week heading into next week. I do think from the look of it right now, and I could be completely wrong, but from the look of it right now, this does seem as though if it's going to recover, it's going to take a little while, meaning that if the bears don't start pushing it down from here immediately and work its way down through the 58.4, 55.850, and then subsequently 53.5, it's going to start changing and turning, right? It's going to start looking a little bit more like they don't have the juice to push it down any further. And then we can start looking for those possible trend changes if they don't occur before then. Now, in terms of momentum, this is a regular Stoch, not a Stoch RSI. So this is measuring close over close price momentum, not the velocity of RSI. We already have an RSI that we're going to reference in just a moment. So this and RSI is momentum as well. So in this case, we have one picture of momentum here is just the close over close price momentum, and that is this Stoch or stochastic indicator. This is running a 6.3. I think it's a 6.3, 14, 255 look back. This is a paid indicator. It's from Eric Crown over there, and KVDB is the developer. But you can get free ones. There's a free one called the Reverse Stoch Panel. Just search that in your indicators tab. It's essentially the same thing. This one just has other bells and whistles that I don't usually talk about with you because it'd be way over many people's heads that watch my content. So in this case, we'll work up to it eventually maybe. But in this case, we can see the momentum pivot on the daily is at 57,510. So 57.5 is, essentially where the lower first is on our chart here. So if we start to see 58,400 break down the lower term timeframes, keep an eye on around 57,500. Not only is that the momentum pivot on the daily, but that's also the lower first on the daily. If we see a daily close below there and it hasn't already hit the bottom side of the risk zone here at 55,800, then that's the next area that I'd be paying attention to, and lower into the danger zone if it starts to break down from there down to that 53.5 and possibly run the lows into target one of distribution. So pay close attention to 57,500 over the course of today going into Wednesday's candle. So even though it's Monday still for me, it's the Tuesday candle that's open right now. So pay close attention to it as we head into Wednesday, as I do not have a video for you on Tuesdays. So that's pretty much the daily. We're going to call that a wrap on the daily, outside of one last thing here, and that is RSI. And you can see that, there was already bullish divergence on that lower low at $49,000 as it relates to 53.5 and 56.5. So this was the 56,500 low. This was 53,500. This is $49,000. There's already bullish divergence here. So just a cursory look back down at the bearish control zone. That's actually at 55,500 or so, right around the bottom side of the risk zone, top side of the danger zone there at 55.8. So, if it does tag those areas not close below, great. Then it'd be a retest of the actual bearish control zone. And of course, anywhere below 56,500, it's throwing regular bullish divergence from this low over here. So it's not going to populate on this particular indicator because it's been so many bars spent in this area. And I don't have the look back that high right now. But let's also take a look at where the simple moving average here. This is a 12-period SMA on the RSI here. That's at 57,200. So again, we have some confluences around that mid to low $57,000 region with the daily momentum pivot, the lower first standard deviation, and even the simple moving average here, the 12-period SMA on RSI. So that is definitely the number to watch out for today. Let's go ahead and turn volatility back on. And let's go ahead and take a look at that weekly close. We'll get rid of the accumulation distribution zones. We don't really need it. We already know where those zones are. It's been well-worn territory on both the high time frame and the low time frame on the daily here now. So let's go ahead and take a look at that weekly. You can see that the criteria for the weekly is pretty simple here. If we start seeing closes below the lower second at 56,120, I would expect the close open on the weekly here to get tagged. Again, that's that daily low that was set there at 55,800 to 850, depending on your chart. Here it's 850. So 55,850 on Coinbase. Anywhere below the lower second, that's basically, we're looking at expansion on the weekly. We have this big expansion to compression, and that would be etchings of expansion to the downside. You see that even on the extreme move down, in last week's candle, Bitcoin did not close below the lower second. But if we start seeing it trade down below there intra-week, meaning before Sunday's closure, then we could see this low being ran. We need to see closures remain above here on the weekly. You don't want to see closures below 56,100 or so on the weekly time frame. So headed into Sunday, any closes below the wick low would be extremely aggressive volatility expansion of the Bollinger Bands and BBWP in this case, and would start to look for some of those lower prices. Of course, you can see that this was a direct retest of the ETF launch highs here at $49,000, by the way. So that's a beautiful point of confluence, right? But we'd be looking basically below $49,000 into our electrical costs. They're roughly 45 to 48. Maybe electrical cost ticks down from there, and we have to look at target 3, which I haven't discussed today, but we would discuss it if this happens, which is somewhere around $38,500 to I think $42,000. But I digress. The other thing to look for over the course of this week is any closes above last week's wick high, especially coming into Sunday's closure. Any closes back above 62,755. So it's all the same criteria. If we start seeing the daily trend break to the upside, meaning it breaks the downtrend above 62,755, 62.8 if you like, on the daily. That would be a trend break on the daily, but that's also very encouraging for the weekly because any closes above this wick high will set a higher low on a swing and a close. Now, granted, it's not out of the woods until it starts closing back above this closing high structure on the weekly, which is 68,000, we'll call it 200. And then, of course, take out the lower high wick at $70,000. But that would be very encouraging to set a low on the weekly, not just on a swing, but on a close. And then we can start targeting, if it didn't already regain the basis band at $64,000 in the weekly, then we can target that area to the upper first, which is right around that close open there at 68,200. And then subsequently anywhere above the upper first, we're looking to the last lower high at $70,000, and then to the upper second standard deviation above 72, which is the next lower high up here. So that would be the second lower high within this structure. Anywhere above there, we're looking for volatility expansion to the upside, and any closures above the all-time high would kick that off, as well as closing above the upper second would start to look like the bull run is on from the weekly perspective. So there's a few other things to look at here just real quick, and that is the momentum. And momentum is actually pointed to the upside on the weekly. We even have a nice little W for we're all winning, right? Everybody's winning right now. It's a little bit of a joke. There's a lot of tears in the market at the moment. 55,768. So again, we have that momentum pivot on the weekly falling right in and around this this low on the weekly. So we don't want to see any closes below this close open low, which is coming in at 55,854. Granted, the momentum pivot is a little bit below there. It's at 55,779, but it's so close, you might as well just call it. If this is lost, that momentum's going to turn down, right? So we need to see the low on the weekly held on a closing basis. Anywhere below there would not only put it below the lower second, but also below the close. It would also turn the pivot down, which then would start looking like daily distribution into some of the areas that I talked about earlier, 53 to 50, 48 to 45. And then that would obviously bring on board the further target areas to the downside, 42 to 38.5, which is a big monthly, weekly zone. So, I'm sticking to my guns. I think at worst, if there was going to be like a crash scenario, and not just a trending move, but a crash scenario, at worst, we're looking at $45,000 around the electrical cost. If it's going to be a trending move, then we will likely see electrical costs come down a bit. That doesn't mean it's going to take extreme legs down to some of the more aggressive targets that I've seen out there, but somewhere just below $45,000, very likely. If we were to see a trending move and not just a big spike down like we saw last week. So I hope that that pretty much wraps up everything that I've talked about last week into this week in various spaces events for you. And then, of course, last week's videos. This is going to serve as the basis for my thesis moving forward in Wednesday's video and Friday's video this week, which I'm going to try to keep shorter for you, as this one has been a little bit longer. And I want to wish you a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Come and hang out with me tomorrow, Tuesday at 10:30 a.m. Pacific Standard Time, 1:30 p.m. Eastern Standard Time for the 100-day giveaway Welsh event, where I'm going to be co-hosting that event with Stuart and Bit by Bit. And then, of course, Wednesday, the Palm Spaces event. I think there's going to be there might be, maybe not this week, but there might be a surprise Thursday event that I'm going to be letting you know about with a really awesome community and some really great speakers with really great voices. I can't wait to hear them again on Thursdays. And then, of course, on Friday, come hang with me and Goyoza in the Nat Monkey Spaces event. And we're going to start doing some more new Bitcoin order events as well with Loki over there. So keep an eye out on X for all of that stuff. I really appreciate everyone giving me your feedback and your love from the events and from the videos and stuff like that. And I look forward to talking to you again in video format Wednesday. And I promise you that one will be shorter than they were last week. Take care of yourselves. 90 out.